What's going on, everybody? Super excited about this opportunity here on Google. I'm going to dive straight into it. And this chart is looking absolutely pristine. And it is every trader's dream right here. That being said, we need to make sure we execute it correctly. Nothing in this video I say is ever financial advice, but I do think it is worth potentially putting something on your radar, maybe on your watch list. Check it out, study it, see if you agree, maybe you disagree. I'm going to show you my findings here right now on Google. One thing I want to note, Google here has earnings on the 4th of February. So in about 5 days from now, okay? So I'm not placing any trades here on Google before earnings. That's just not smart, especially for an options trade. However, there is a great, fabulous consolidation phase here on Google going on, and I think it looks fantastic. Let me show you. So first of all, trend lines. Trend lines are very important in technical analysis. Let me fix this. I'm gonna go ahead and refine it so that it connects. Perfect. So you can see right here we have 1, 2, 3, and 4, maybe 4.5, 5 touches right here, but we have 3 main touches. 1, 2, and 3. 3 main touches right here. It looks phenomenal. You want to make sure your trend lines have at least 3 touches for the best strength. Now, what if I create this into a flag right here, or a channel, excuse me. So I'm going to redraw this as a channel, and you can see Google is consolidating. Consolidation phases, they can trend upwards, they can trend downwards. That's what a channel is called. They don't need to go exactly horizontal like this. They do not need to go like this. They can also go like, they can also go like this as well. Right? So something to keep in mind here. You can also draw this a little bit differently if you really wanted to. So let's say I removed that and I added the trend line right here, and then maybe you wanted to add a price level, maybe right around right here. You could do that as well. Look at this. If I mark this level at 200, Google has not been able to get above $200 a share, right? It's that simple. We've had a few times where we've tested, we've gotten over it just a little bit, right? This one, this one, this one. You see these wicks on these candlesticks. Google hasn't been able to move higher and close above $200 a share consistently. This candle right here, we actually closed at $200. I'm looking up here at the C. We actually closed at $200.21, but of course just didn't work out. So what I'm watching for Google is, do we break out of this consolidation phase? Do we break out of this channel potentially here? This is pristine because this is brewing, guys. This is brewing to be up to be something very, very extreme here. So this can go either way. This can break out to the downside or it can break out to the upside. As traders, we have the opportunity to trade either direction. We just have to follow the market and we have to read what it is giving us. We do not need to be biased here. Google, if I apply some moving averages, if I load up the 50 and the 200, we are currently above both moving averages right here, and it is looking very, very nice. I would definitely favor this to the upside if I had to choose. Again, I am not putting any risk on, and that doesn't mean you should. Now let's find our key levels here. So key levels, I'm going to find those with my Fibonacci extensions. And if you've been watching some of my other SPY videos, I use these quite extensively, and they really, really, really help me find key levels for profit targets, support, and resistances, especially when a stock is about to make new all-time highs, like how Google could potentially do here as well. Again, potentially. Google can also sink on earnings if the market has a negative reaction. But let's go ahead and find our levels to the upside if necessary. So point A, point B, and point C. That's how I'm going to draw my extensions. Point A, point B, and point C. So Google has to go above 205.61. Above 205.61, Google can hit 214.84 if we break out of this channel. Ideally, we do not want to see Google go below 190 here, right here, which is our 0% level, the bottom of our trend. We do not want to see Google will go below 190, although I will admit we can probably see it go lower, and it might be okay because we do have the 15-day moving average tested right here as kind of the support area, or at least just an area where you might find more buyers potentially. I think this is super ideal if Google has really great earnings and it goes up to the upside and it breaks out of this channel. this is going to be a mega trade opportunity right here. So I'll keep you updated on how this plays out. I wanted to give you just a quick video on this Google analysis. Remember, consolidation phases, you can find these on any certain stock, and when you find consolidation on any stock, it is brewing for something bigger. Consolidation phases are so crucial to find because they help you apply patience and they help you apply execution skills when you need to execute. This will probably be around the earnings date if we do break out of the channel. Earnings, we do not need to break out of the channel. We can still remain within this consolidation area, and maybe a different catalyst will bump up Google or maybe push Google even lower. So thanks for watching. I really hope you enjoyed this video. One last thing on the weekly chart is I just want to show you how these candlesticks are forming. As you can see, we're not really going anywhere. We're squeezing, we're consolidating, and we're brewing up for something bigger. We've been consolidating for 1, 2, 3, 4, 5, 6, and 7 weeks so far. The longer the consolidation phase, the bigger the breakout. Thanks for watching, everybody. Hope you enjoyed. Have a fabulous rest of your week. Happy trading. Do your own due diligence and take care. I'll see you on the next one.